I'm Julia Danbury, the Director of Client Relations with Consociate, your third-party administrator for the District 150 Medical Plan and Flexible Spending Account. In this video, I will be discussing the Flexible Spending Account programs, and I will explain what an FSA is, how the account can be used, and important reminders for current elections, and how to enroll for the upcoming plan year. All employees are required to complete the Flexible Spending Enrollment Form either online or via paper form turned in at one of the open enrollment meetings or drop-off locations. Please be sure to complete the entire form, and most importantly, please include your cell phone or home phone number on the form. The Flexible Spending Account is a way for you to set funds aside on a pre-tax basis to pay for healthcare or dependent daycare related expenses. Typically, for every dollar that you earn, a quarter of it goes to the government for tax purposes, depending on your tax bracket, but typically a quarter is the lowest amount. Employees take home 75 cents of every dollar they earn. Employees then use the 75 cents to pay for mortgages, rent, car payments, groceries, gas, and other expenses, such as medical expenses, prescriptions, or daycare-related expenses. So by setting aside funds in an FSA, you are getting to use the full dollar instead of the 75 cents you were previously using. The Flexible Spending Account is an annual program which requires you to enroll every year. The annual election you make at the beginning of the year is divided evenly amongst all of your pay periods within the plan year. Your plan year is January 1st through December 31st. Your plan year does have an extension for incurred claims, which I will discuss later in this video. The annual election cannot be changed unless you have a change in status. A change in status can be marriage, divorce, birth or death, change in status of employment, or loss of other coverage. You must submit the change to the insurance department within 30 days of the change in status. If you miss this period, then you will need to wait until open enrollment of the following plan year. There are two types of accounts that you can enroll in. The first is the Healthcare Flexible Spending Account, and the second is the Dependent Daycare Account. The Healthcare Flexible Spending Account is an account which will cover you, your spouse, and any eligible dependents in your household for all healthcare related expenses. The maximum amount you can put aside in this account is $2,550. Items which are eligible include things such as medical deductibles, co-pays, co-insurance, any sort of dental-related expenses, so things such as teeth cleanings, fillings, root canals, wisdom teeth removal, orthodontia, or dentures. Vision care-related expenses, which include eye exams, glasses, contact lenses, prescription sunglasses, LASIK eye surgery, and then also other healthcare-related expenses such as hearing aids, prescription drugs, and those related expenses. Eligible expenses are in no way tied to a medical plan, so you could be enrolled here at the district, or you could be enrolled on a spouse's plan, and all expenses would still be eligible under the Healthcare Flexible Spending Account. Items which are ineligible are typically hygiene or cosmetic related. For example, shampoo, diapers, deodorant, reconstructive surgery, non-medical related, and so on are all ineligible expenses. The eligible and ineligible listing of expenses can be found under the Staff Systems portion of the District 150 website. There is one exception to the eligible expenses I named off. If you are enrolled under Plan B with the district, then you are only eligible to enroll in a limited purpose flexible spending account. Plan B is a high deductible health plan and thus allows you to enroll in a health savings account or an HSA. You can only be enrolled with a limited purpose FSA when in Plan B. The limited purpose flexible spending account will only cover dental and vision expenses and will not cover medical expenses incurred. The second account is the Dependent Daycare Account. This account is typically used for expenses on children which are preschool age and younger, for full-time care, and before and after school care for children up to age 13. Eligible dependents can also include a child, a spouse, or other dependent who is physically or mentally incapable of caring for themselves and spends at least 8 hours a day in your household. Eligible dependent daycare expenses must be for care incurred while you and/or a spouse attend school or are actively looking for work or working outside of the home. Eligible expenses cannot include babysitting for a date night with your spouse or travel. The provider does not need to be licensed but does need to be claiming the income for tax purposes. The maximum amount you can set aside in the dependent daycare account is $5,000 if you are filing separately or married filing jointly, and $2,500 for married filing separate returns. There is one feature on the Healthcare Flexible Spending Account, which I like to call the mini loan program. This feature allows employees to use their full election amount when they incur the expenses, not when they have had the funds taken from their paycheck. For example, if I make my election for $500 under the Healthcare FSA, the $500 is divided evenly amongst all of my pay periods for the plan year, but I could have an expense on January 2nd and use the full $500 election. It allows you to use the funds as you incur the expenses, but still have the deduction spread throughout the FSA plan year. This feature is not available under the Dependent Care FSA, as these accounts are what I call money in, money out accounts. The most important feature of the flexible spending account is the one which most employees associate with the flexible spending account. It is what's called the use it or lose it provision. The provision states that whatever election you make, you must use within the plan year, or you will lose whatever is left in the account. Your employer has elected a 2.5-month extension, which means eligible expenses can be incurred between January 1st and March 15th of the following plan year. A claim is only incurred if that was the date of the services were incurred or the product was purchased. Incurred date does not mean the date you received a bill. After March 15th, employees will have until April 29th of the following year to submit the claims incurred prior to March 16th for reimbursement. Consociate has recently launched their Enhanced FSA web portal and mobile claims app. The enhanced portal is located at www.consociatefsa.com. The portal allows employees to view up-to-the-minute plan balances, file claims, submit receipts for card swipes, sign up for direct deposit, and much more. You can also download the Consociate FSA mobile app. With the Consociate FSA mobile app, filing a claim or submitting receipt documentation is as easy as taking a picture of your explanation of benefits or bill for services. If you do not wish to file claims via online or the mobile app, then you can complete a claim form located under the Staff Systems portion of the District 150 website. Attach an EOB or documentation showing date of service, services received or the product purchased, and the amount that you owed. Then fax, mail, or email in the documentation. We will process the claim and mail you a check for your reimbursement. You can also sign up to receive direct deposit for your reimbursements. All employees enrolling in the FSA program will receive a Benny debit card, which can be used to pay for eligible expenses. If you are currently enrolled in the FSA program, please hold on to your Benny card as it will be reloaded with your new election on January 1st. All employees who newly enroll in the flexible spending account will automatically receive 2 Benny debit cards. Both will have your name on them. You sign the back of the card that you will be utilizing and have your spouse or dependent sign the back of the card that he or she will be using. The card works based off of merchant code, so it will only work at healthcare or dependent daycare related merchants. For example, it will work at medical care, dental care, or vision care providers, and also all pharmacies or mass merchandisers. An example of mass merchandisers is Target, Walmart, Costco, Schnucks, Kroger, Walgreens, and so on. The IRS requires that 100% of all tax-free money used under an FSA is documented with the administrator. We have many items built into our system to try to reduce the number of receipt requests, but must follow the IRS guidelines on what we can accept. We build in all of the District 150 copays, and submit medical claims files in order to match up as many card swipes as possible. But if you are unable to do so, if we are unable to do so, we will send you a letter requesting you to send the documentation. If you do not provide the documentation, the expense will become a taxable expense. Mass merchandisers are required under IRS guidelines to have a barcoding system in place to only allow expenses that are FSA eligible to work on the Benny cards. Therefore, most all card swipes at the pharmacies and/or mass merchandisers will not require documentation, but we still always suggest to you that you are cautious and save all receipts. The Benny cards will also work for dependent daycare expenses, but only if the providers accept credit cards and their merchant codes are daycare related. If they do not accept a credit card, then you will need to continue to submit a claim via a claim form or through the web portal. A receipt from the provider or the provider's signature on the form will need to be included. Please keep in mind you will only be reimbursed for the total amount deducted from your paycheck at the time of the requested reimbursement. For instance, if you elected $1,000 for the plan year but have only had $300 deducted from your paycheck to date, then you will only be able to be reimbursed for $300 from the dependent daycare account. For those individuals currently enrolled in the FSA, please hold on to your Benny cards. Your new elections will be loaded on your current card as of January 1st. The cards will continue to pull from any prior plan year balance during the extension until the balance is depleted. The card will then begin pulling from your new election amount. The claim forms, frequently asked questions pieces, direct deposit election form, eligible and ineligible expense listing, and FSA savings calculators are all available for your review under the staff systems portion of the District 150 website. As a reminder, everyone must complete a flexible spending account form, either online or a paper form. Please be sure to include your cell phone number or home phone number on the flexible spending election form. Thank you again for allowing Consociate to continue to service Peoria Public Schools, District 150 medical and flexible spending accounts. Thank you.